Bitcoin typically has up and down cycles, bull and bear cycles. And, up until this most recent correction, the euphoria was high. It felt like everyone was feeling like we're in a bull cycle. Have we seen the top of this bull cycle? And if not, give us a prediction. The people always want predictions and everyone hates giving predictions, but I'm going to put you on the spot. I'm going to start with you, Cathie, and then go to Anthony.
Yeah, I'm in print. And we are in print, Ark Invest, based on the research that Yassine El-Mandra has done, that institutions will become a very important part of this ecosystem. And if we use those two numbers, that range 2.5% to 6.5%, you go towards the upper end of that, say 5%, that alone would add $500,000 to Bitcoin's price, just as institutions try to get a foothold in. So we're extremely optimistic about Bitcoin, and I'm more optimistic now after this correction. In the equity market, you call 20% a bear market. I don't know what they call a bear market in crypto. So I feel, though, that as Anthony said, that we haven't even begun the institutional movement into the space. And so just that one use case gets us to that kind of price. Of course, the volatility will be with us. My compliance department would be very upset if I did not add that. It's not going to be straight up. It's not a super cycle without 50% corrections. And beware from a leverage point of view. You can lose everything out there in crypto if you're a leveraged player. So buyer beware, be careful, but hang on for a beautiful ride. We do believe Grayscale when it says that it has every intention, when the SEC allows, regulators allow, to convert into a Bitcoin ETF. And it does seem, with Gary Gensler now heading the SEC, that we're closer. Many people will say, oh, no, this volatility has really thrown that off. And, I think this volatility is almost good news because it is a lesson. Hey, this is a volatile asset. As long as investors describe it accurately, or asset managers describe it accurately as very volatile, although the volatility, if you look long-term, is coming down. It's still very volatile. I do believe this notion of a super cycle would never have another 50% correction. That's out the window. That's good. That is really good because regulators don't like any guarantees like that. So you've got that one out the window. You've got the price lower, so individuals won't be top ticking in the mid 60s, right? Much better price here. And you've got two people, well, many people at the SEC, but two in particular, Gary now, who is an advocate of its place in the financial world, as well as the director of research at the SEC, who was promoted and now reports directly to the SEC chairman, in this case, Gary Gensler. So the SEC has placed a high priority, and we know in the last 4 years, since their first request for information, and we did send a response. We felt at that time, 4 years ago, we weren't ready from a liquidity point of view. I think that has changed, and I think the SEC's knowledge is terrific. I think there are a lot of, they've investigated every nook and cranny. So I think we're much closer. I think ESG is the second reason that it has gone down. Environmental, social governance, primarily environmental. How is Bitcoin mined? A lot of institutions are asking that question. And ESG has become a very important strategy, especially in Europe, increasingly in the United States. And this was one more risk that it was going to keep institutions from migrating into this new asset class. This is a new asset class, And from 10, 11 years worth of data, we can see the low correlation of returns compared to other assets. Institutional investors have to consider this because certainly their competitors are, as another form of diversification and opportunity. And I think this put that off for a moment. But I think that the spotlight on the environment is going to cause something really interesting to happen here. We just wrote a paper with Square about the ramifications of putting Bitcoin mining into a solar power wall merchant power ecosystem so that it could absorb all the extra energy coming from the sun after the battery, the power pack is filled up. That would add a new dimension of economics to this ecosystem and would encourage homeowners and utilities to add more solar to their own ecosystems than otherwise would be the case. So it's actually going to accelerate the movement into renewables. I think that's what's going to bring institutions back. And I think Elon Musk highlighting, is this a risk that I have considered adequately as I put Bitcoin on my firm's balance sheet? I think he's going to be a part of the solution. So we think what has happened here is actually going to turn into good news. If institutions start moving in, where will they go? Well, they'll tiptoe in. A Mass Mutual, I guess, was $100 million for their general account, which is it's probably 0.002% of their general account. So that's really tiptoeing in, and just gives you a sense of how far we have to go. According to those simulations, in order to maximize the Sharpe ratio, an institution might move towards, in crypto assets, we did it on Bitcoin, 6% of a portfolio in Bitcoin in order to minimize volatility and enjoy the increased return associated with crypto. That percent might be more like 2.5%. And it reminds me of the emerging markets in the 1980s. MSCI came along and said, hey, wait a minute, these countries, they're all emerging markets very early on, but they each have idiosyncratic risks. Why don't we put them all together in a portfolio? And returns will be higher, risk lower than in any one alone. I think the same thing's going to happen to the crypto asset ecosystem, starting with Bitcoin and Ether. Ray Dalio earlier this week said he'd prefer to own Bitcoin than bonds. Now, he's worried about a deflationary bust. And I think the truth actually is somewhere in between. He is worried about the counterparty risk that is going to occur because of a deflationary bust in the global ecosystem. So think about it. We're talking about a hedge against inflation and a hedge against deflation. That's pretty good. That is pretty darn good. I don't think I know of another asset, maybe gold, but no, I actually think this is the first rules-based monetary policy, global, stateless, and trustless. So I think we're on to a completely different animal here, and it's pretty exciting. Bitcoin is the safest, the most secure of the blockchain technologies. And I think that is a huge consideration for institutions. Security, safety, is this thing going to blow up on me? So Bitcoin is the most secure, makes sense. It's the right place to start. The correlation of returns very low. And it also is the leader of the pack. If you look at 2017, as the crypto world took off, led by Bitcoin, here again in the last 6 months, led by Bitcoin. Ether was very slow this time to respond, but came on obviously once confidence increased, came on very strongly. Different. I think institutions will diversify into other crypto assets, but they have to walk before they run, and I think they have to feel safe and secure in the knowledge that their assets are not, as I said, going to be in harm's way. Maybe the volatility is there, but that their Bitcoin will be there. It will not be confiscated in any way that they might fear. So I think that's why you're seeing the step first into Bitcoin, and then as a launching pad into others.